Hey folks, welcome back to another SPY challenge update where I trade SPY options in my attempt to beat the S&P 500 for this year. This will be for the update of week 37. Last week I made $143 and in this week $432 with 3 trading sessions. I was busy on Monday and Friday, so I had Tuesday, I made $73, on Wednesday $365 after commission. And then on Thursday, I lost a bit of money because the $9 in trading fees was more than the $3 in net gains that I made for the day. So altogether, I'm up 41% for the year. And this is what the graph looks like. And the purple line here is for the SPY. And you can see over the last couple of weeks, the S&P 500 has been losing momentum. The highest point for the SPY was week 30. That would have been the end of July. And it attempted to go higher a few weeks ago, but was met with resistance there, so it did not make a new high. To take a closer look, let's go to the SPY chart on TradingView, and this is the daily chart here. We had a big red candle on Friday, down 1.55% on larger than average volume. In my last update, I mentioned that the SPY was likely going to move lower, and it looks like that's what happened. It's having trouble testing the previous high back in July. So where is the stock market likely to go in the next week? Well, if we look closely at what's happening, it's basically forming 3 touches on this line, and there are also 3 touches on this line, which basically forms a triangle, meaning the stock market is getting wedged in between these 2 lines, and whichever one it breaks first is likely to move very aggressively in that direction. So I will be watching closely next week on Monday. If on the 18th the SPY goes down and it ends the day below this yellow line, then that's very bearish, and I would expect lower price targets from there. The first one being this support level at around 438. And if it goes through that, then this support area down here around 432, 433. But I would be careful of the backtest. So it might drop down first and then try to come up and retest the bottom of this triangle. And then from here, it can either go up or it can continue its momentum going downwards. So I would probably buy puts or sell calls if the market falls lower, and then put my stop loss over here because that's the previous high made on September the 14th. And similarly, the other way, if the market goes up and breaks out above the top of this triangle and goes higher, then I would look at either selling puts or buying calls. And I would put my stop loss over here because that's where the previous support was, meaning I would get out of my long position if the market goes up, comes down, and then breaks back down below this line here, because that means the market is likely going to head lower, and this was just a fake breakout. Another way to look at this is if we zoom out, we can see that this triangle is actually just 2 contradicting channels fighting with each other. If I connect the swing highs of this point here, and this point, and this point, and draw a channel this way, you can see that the bottom line of the triangle is pretty much the bottom of this rising channel. And if I draw another channel this way, connecting this point here with these points here and this point here, we can see that this pretty much forms a bear channel and matches up with the top orange line of the triangle. So this is actually a diamond pattern because it's 2 channels heading in opposite directions, and we have this cross section which forms a diamond shape. And the triangle really is just a part of this diamond. But in either case, it doesn't matter if you're looking at the triangle or looking at the diamond. We are in this situation now where it's going to break out either to the top or to the bottom. So we can watch closely for that. And we're either going to get the breakout next week or the week after, because the diamond ends on October 2nd. So the market should find some sort of resolution before that. Now, in this case, I don't have a bias going into the next couple of weeks because it really could go either way. If I had to guess, just based on this latest candle over here that was super red on high volume, I would say it's more likely that this triangle or diamond will break out to the bottom side, but it's still pretty much 50-50 at this point, just because it's really doing nothing over the last few weeks but consolidating. So sometimes trading is just a waiting game. You don't want to take any actions before you see the right signal. And that's okay because it's about making high probability trades over an extended period of time. So thanks a lot for watching, and I'll talk to you in the next one.